even though a stock is down 70 or 80%, it could still drop 100% from here. And that's what I think is going to happen with these types of brands in this type of environment. And I'm going to show you exactly why. I posted a warning after a popular YouTuber put out a video about the best stocks to buy in October or something, or whatever it was. They were talking about how Oatly, Tattooed Chef, Beyond, and Honest were just great companies and to keep on buying because the stocks are down so much. There's a lot of stocks down a lot. And there are unfortunately a lot of stocks that are never going to recover and that are not only just not going to recover, but they're going to keep dropping most likely. So I got a lot of hate feedback on this, right? But what I said to do was not to buy these companies, or at least I wouldn't. And if I wanted exposure to these types of brand, consumer packaged goods, I would take all the money that I was considering putting into these trashy crap companies and put them into a quality stock like Pepsi. Since that video, October 3rd, 2022, Pepsi's up almost 8%. Beyond Meat is surprisingly up about 5%. Honest Company's down 4%. Oatly's down 9%. And Tattooed Chef is down 26%. And Oatly might even be down more than that after today, right? Jumping back over to just Oatly's recent report, right? This is what's so alarming, and I think we're going to see the same thing in those types of companies. They posted a wider than expected loss for the third quarter with a modest 7% jump in revenue from year over year to 183 million. It was 28 million short of consensus estimates. Gross profit margin was $5 million for a 2.7% gross profit margin, which was down from $45 million or a 26% gross margin a year ago. Their management team said financial results were below our expectations, largely driven by COVID-19 restrictions in Asia, production challenges in the Americas, and continued foreign exchange headwinds. However, we continue to see strong velocities year over year, sales volume growth, and minimal price elasticity globally, which we believe demonstrates the power and resilience of the brand. That's about to change, and I don't even believe what he's saying, but this is about to change. Consumers are going to get a lot more thoughtful about where they're spending in the grocery store, and they're not going to buy this crap anymore, especially when they can't even get it. They're going to go to cheaper brands. The company's taken decisive and strategic actions to shore up its supply chain and improve operational efficiencies. 25% headcount reduction across group corporate functions. But despite the cost cuts, sales are expected to remain far below consensus expectations. So management's expecting 700 to 720 million in full year sales compared to 800 to 830, almost $100 million miss on full year sales from their prior projections, saying they believe the challenges are transitory and they have significant opportunities for growth as headwinds subside. In the meantime, we've taken actions to adjust our supply chain network, simplify the organizational structure for more balanced growth. Okay, and that's exactly why I put out this warning video after a popular YouTuber out there was pushing these crappy stocks in October. On October 3rd, I put out this warning that said the 4 worst stocks to buy in October. And I actually said if you wanted exposure to consumer packaged goods, grocery store style stocks, you would be better off buying Pepsi instead of these. And I think we're going to see similar things from Tattooed Chef, Beyond, and Honest that we just saw from Oatly. And so since that video came out, Pepsi's up about 8%, Beyond Meat's up almost 5%, which is impressive. The Honest Company's down 4%, Oatly's down 9%, but it might even be worse than that now, and Tattooed Chef is down 26%. Check out that last video that I did that talked about all the reasons I don't like these companies, but the bottom line is they're just not growing fast enough, don't have a long enough history as public companies, and then even if you look 3 years out on a price to earnings basis, they're still expected to have negative price to earnings, terrible net income, and I'm not even sure that these companies can stick around that long as we talk about recession, supply chain problems, just burning through more money. The stocks could seriously drop 20 to 50% from here, get acquired. Who knows what's going to happen, but I know for sure that I don't want to be in stocks like this. Even if you're in one and it goes up a lot, I responsibly could not invest a large amount of money in any of these stocks. So what's the point in owning them anyways? That's the way I think about it. And so then when you think about the risk associated with them and just we see the brands going in the wrong direction in a bad time to own these types of stocks economically, I would just rather own things elsewhere. I own software stocks anyways, but I just want to put this warning out about these stocks. And I don't know if this person's going to put out another video pushing Oatly after this terrible quarter. It'll be interesting to see. But this is my warning for anybody thinking about Oatly or these types of stocks. Do your own research and dive into them deep and figure out if they're even going to be around, because consumer, these things fads go in and go out, right? And the companies that are going to stick around and own the market are the Pepsis and the big brands of the world, as unfortunate as that is, or highly profitable smaller brands that keep lean operations, which are not any of these, at least from what I've seen.